What's going on, guys? Dimitri with My Trading Profit here. I hope everyone's having a wonderful day. Today we're going to start with the dollar index, crude oil, and gold before looking at the major currency pairs. Definitely stick around for the whole video. It's going to be pretty interesting, so let's get started right now. Just would like to start off by saying that today's video is for educational purposes only. I am not a financial advisor. My opinion is not intended as a trading advice or investment advice. There is a disclaimer at the bottom of the page, so please scroll down and read it. Before we get started, be sure to hit that subscribe button and leave a like down below. First up is the dollar index. Here's what I said last week. Let's see what happened. If we get a pullback and rejection of the key level of 97.35, I would look for short opportunities to the downside to targets 96.80, 96.40, and 96.20. We can see the lower lows and lower highs. That means we're still in a downtrend structure. Last week, the price pulled back into the channel, and currently it's testing the key level. If we get a rejection of this area, that means we're going to see a continuation to the first level of 96.80, then possibly to create a double bottom around 96.40. And if this area is not going to hold, that means next level would be 96.20 right here. If next week the price will break out of this downtrend to close above this trend line right here, I would like to see a pullback to the key level, rejection of this area, and only then continuation to 97.75 and possibly to 98.20. All right, next up is gold. Let's have a quick recap of what's been said last week. So if we break above the key level and retest it, I would be bullish to the next level of 1575.10. As you can see, last week we broke above the key level, tested it, and exceeded our target due to the conflict between the US and Iran. Shortly after, we had a strong sell-off with the price closing below the key level. I would recommend to stay away from trading gold until it breaks the support area of 1544.50 with the target of 1525.40 and 1514.50. And if the price breaks above the resistance area of 1580, then we could see a continuation to the next area of 1618.80. Okay, next up is crude oil. As always, let's look at what we've analyzed last week. We might see a continuation to levels 63.5. If we break above it and retest it, then the next target would be 64.90. In a very unlikely situation, in case the price falls down and closes below the channel and also the zone between the 61.6 and 61.1, I would be looking into sells around this area into the key level of 59.3. As you can see, last week we reached all of our targets after the break and retest. So the first one was at 63.50 and the second one was at 64.90. Shortly after, the price broke out of the ascending channel, reaching the key level at 59.30. So this means that the last move is overextended, and there might be some kind of correction to test the resistance area at 60.90. And if we close above it, test it, then the next resistance area would be at 62.20. If next week the price will break out of the daily ascending channel and close below the support area at 57.90, we might see a continuation to the next support area at 56.60. Next, we have AUD/USD. If, on the other hand, we drop below it, retest it, then we're bearish to levels 0.688 and 0.6860. Once again, our forecast played out nicely and all the targets have been reached. Last week, we broke out of the trend line and closed above the structure. So next week, I'm going to be bullish if the price comes back to retest the area of 68.75. And I'm going to be looking into targets at 0.6930. And if we close above it, then the next target would be 69.60. All right, next up is euro dollar frame. If the price retests the area of 1.111 and rejects it, this would be a nice area to start looking for bullish setups. The price may then reverse and go up to test the level of 1.118. Once again, the forecast from last week played out nicely. As of now, we are still in a downtrend because we can see lower lows, lower highs. So that means this is still a bearish structure. We're also inside of the descending channel, and therefore we need a break and close above the trend line before looking for bullish setups. The bullish target at 1.118 remains the same from last week, but we would need to overcome a previous resistance level at 1.114 before reaching the next target. This zone right here is a major support level, and I would recommend to stay away from shorting this pair at this moment in time. So again, if we break above the trend line, test this area at 1.111, the next target would be at 1.114, close above it, retest, then the next target would be at 1.118. All right, let's review our analysis from last week on GBPUSD. If, however, we break below the support level of 1.3065 and break out of the ascending channel, I would be bearish to levels 1.301, 1.293, and 1.285. As you can see, we broke out of the ascending channel and closed below the support level of 1.3065. Our first target has been reached at 0.301. And also notice the structure that we got lower lows and lower highs. The only thing I don't like about the structure is the fact that we got two drivers here. One over here, which is the driver and a possible correction. But also we have another driver right here with a possible correction. As you know that after each correction, there is a continuation. So this can be a little confusing, but let's trade what we see instead of what we think. So if I drop the Fibonacci retracement tool, then we can see that this zone right here that has been reached last week is also in fact the 78.6 retracement level, which is a very major support area. If we manage to close below it, retest it, then I wouldn't be surprised to see a continuation to the downside to the next level of 1.293 and to create a possible double bottom scenario. Or if we close below it, retest it, then the next target would be at 1.285. If on the other hand, we break out of this descending channel and close above the 50% retracement level at 1.31, then we might see a continuation to the next level, which is at 1.317. And if we close above it, then the next two targets would be 1.328 and also 1.334. Let's have a look at New Zealand USD, and as always, we're going to start by reviewing our analysis from last week. Support area of 0.6625 will act as a deciding point for a bias. If the price rejects it, we might see a continuation to the upside to test the resistance level of 0.671 and possibly 0.675. If, on the other hand, we drop below the zone, break out of the ascending channel, retest the zone, then we're bearish to levels 0.656 and 0.652. As you guys can see, the support area between the 0.6625 and 0.661 held nicely. The price is also showing some signs of exhaustion. The current structure is still bearish because we have lower lows and lower highs. And if the price falls below the zone, tests it, then I will be looking for bearish setups to targets at 0.656 and possibly 0.652. If, on the other hand, we break the trend line and retest the support zone, I will be looking at bullish setups with the first target at 0.6675 and 0.672. Next up is USD CAD. As always, let's review our last week's analysis. Since this move is overextended, I would like to see some kind of flag formation to test the top of the channel as well as the zone. And if we get that next week, then I would start to look for some reversal patterns to the downside to test the support area of 1.298 and then 1.294. Just like we expected last week, the price came up to retest the zone at 1.306. We also created a very nice rejection from this level. And I'm going to look for bearish setups to targets at 1.298 and also at 1.294. Okay, next up is USD Swiss. Here's our last week's analysis. On the other hand, if the price breaks out of the supply and demand zone to the upside, breaks the channel and retests it, I would be bullish to the resistance level of 0.98. As you can see, we broke above the descending channel and retested it. We have a bullish structure with higher highs and higher lows, but notice the strong rejection when a bearish engulfing candle occurred. So if the price gets a further rejection of the support level at 0.972, then we could see a continuation to the resistance level at 0.977 and possibly to 0.98. If, on the other hand, we break this counter trend line and this support level at 0.972, then I'll be looking for bearish setups towards level at 0.968 and possibly 0.965. And finally, USDJPY. Let's have a look at the previous analysis and see what happened. So if the price breaks out of this trend line and retests the zone and support level of 108.16, there is a good possibility that the price may be reaching the level of 108.70. As you can see, we retested the support area at 108.16 and exceeded our target at 108.70. Currently, we are at this major resistance area, and if we get a reversal pattern around here, then we could see a pullback to retest the neckline at 108.70, and if we break below it, then possibly continuation to the support zone around 108.16. If, on the other hand, we break above the resistance zone, then we could see a continuation to the next level at 110.20. So this is it for me, guys. I hope you enjoyed the video, and if you did, please let me know by liking, sharing, and subscribing to the channel. Also, if you're interested in learning more about our way of trading, please check out our website at www.mytradingprofit.com for some free educational videos and courses. Big thank you for watching, and I wish you a profitable week.